welcome to the Morningstar series Ask the Expert. I'm Emma Wall and I'm joined today by Morningstar's Director of ETF Research for Asia, Jackie Choy. Hi Jackie.
Hi Emma.
So it's been quite a challenging month, October, for global markets and in particular emerging markets. What's happened in China?
So, it has been very gloomy market all over the world. If you look at the emerging market, pretty similar sort of fall compared to the global markets. S&P 500 dropped around 7%. If you look at the EM, dropped around 8%, 9%. In China, we saw drops of around 8% or so. So pretty much similar that kind of drop all over the world.
There was one market that stood out, however, that did manage to make gains in October, and that was Brazil, wasn't it?
It was quite an outliner if you look at the sort of kind of magnitude. It was a positive return of 17% right after their general election.
And how have investors been reacting to the fall across Asian markets and in particular China? Because traditionally, sometimes volatile markets and falling markets can see investors abandon their funds and ETFs through fear.
Well, this time fear didn't affect the ETF markets for China equity exposure. So it was actually the other way around, where we saw inflows into the China equity ETFs around the world outside of China. So if you look at the largest 10 ETFs with China equity exposure, we saw inflows of around 1.2 billion.
Into those ETFs?
Into those ETFs, yeah.
So people are using this opportunity to perhaps snap up a bargain?
Perhaps.
And what about at the macro level? Because I know the Chinese government and the People's Bank of Japan have been making some moves to potentially, or to hope, to stimulate the market, haven't they?
That's right. The People's Bank of China actually reduced their reserve requirement ratio for the fourth time this year, so pumping liquidity into the market. So this time 1.2 trillion RMB into the market.
I know this is at a time when other markets across the world, for example, if you have a look at the US, are indeed tightening, but China's actually easing, and potentially that means we should start to see the trickle-down effect into markets sometime next year.
Potentially. Well, it's actually quite a sort of disconnect between the different markets. So you saw US raising rate. Actually, a lot of the EM markets have been raising rates, but you saw obviously trade wars going on there. China cutting reserve rates, so pumping liquidity into the market.
Jackie, thank you very much.
Thank you, Emma.
This is Emma Wall from Morningstar. Thank you for watching.